Hey guys, Whitney here. Welcome to the Passive Investing Made Simple show. This is a live show that we do every Tuesday to help you learn the ins and outs of passive investing. If you haven't done so already, make sure to join me at passiveinvestingwithwhitney.com. There you can get access to future masterclass sessions, as well as our boot camps where we deep dive and help you build the skills and tools to get into passive investing. And you get to see our open deals. Oh, and I also forgot to mention, you can also get access to my calendar if you would like to talk all things passive real estate. Again, join me at passiveinvestingwithwhitney.com. Now, today we are going to dive into one of those topics that is probably not the most sexy when it comes to passive investing, but it is a necessary topic for us to cover. And we need to talk about the fees associated with investing in passive real estate. And we're not going to just talk about what those fees are, but we're also going to talk about how you can figure out which fees this actual syndication is charging, or the operators of the syndication are charging, and just to kind of, so you're in the know before you actually write that check into that investment. Now, if this is your first time joining me, welcome. Again, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. And this is the whole reason why I invest in real estate, is so I can have the freedom of time and choice to spend with my family, spend with my friends, travel the world. But it wasn't always like that. I started off investing in real estate in 2002, completely by accident. I bought a house with a significant other. That relationship fell apart. And but anyways, there was a lot of skills I had to learn how to put to use from that, which is I had to rehab a property. YouTube didn't exist back then. I actually got a book called the Home Depot 1-2-3 book and learned all things on how to repair a house and rehab a house. But fast forward over the next few years, did several more live-in flips and house hacks by myself, and then also with my husband, who is pictured here. And then we eventually transitioned into single-family rental investing, scaled a portfolio of over 36 single-family rentals, and then got into multifamily investing in partnership, as passive investors, but also as active investors. And all of this to say, over this time, we've acquired more than 6,500 residential units with us personally, 2,200 self-storage units, and then we have a myriad of other passive investments. But really what we actually got was 100% choice and freedom on how we spend our time, which, if you're here as a passive investor, is probably one of those things that you're after, one of those 5 freedoms in life. Financial freedom is probably where most people start off when they get into real estate and passive investing, but it's what that financial freedom unlocks for you. The freedom of time, the freedom of choice, the freedom of maybe location. Maybe you want to be able to travel or, bounce around to different locations throughout the year. Or maybe just that freedom to go create the impact that you were meant to create in the world. All of those things can be served by achieving some level of financial freedom. And we can actually help you do that here at passiveinvesting.com. We have acquired over 1.4 billion assets under management. And our track record speaks for itself. We've delivered over a 28% ARR to our investors and have distributed over $51 million in investor distributions. Now, what I'm going to talk about today, like I said, we're talking about fees. What fees are in and associated with a passive investment, why it's important for you to pay attention to those fees, and more importantly, how to uncover what those fees are and make sure that they're aligned for the investment, creates that alignment between you and the general partners. I don't think we'll get into any financial advice, legal advice, tax advice. Of course, if you're here live, we stay on after the show and do an Ask Me Anything session. But just in case we do, just make sure that take any of that information and consult with your legal team before investing. All right. So let's talk about the various fees of passive real estate. Okay, there's a whole myriad of fees that one could expect to see in their particular passive investment. But why are fees even charged? Okay, what should they do for you? Okay, fees should create an alignment of interest for performance. Okay, you don't want to go into an investment that has no fees, because if you do, what kind of alignment does that create between you as the limited partner and the general partner for performance? If they're not getting any cut of the deal, what is their incentive to stay in the deal? Okay, but you want to make sure that the fees the pendulum doesn't swing the other way, and that there aren't that many fees or unnecessary fees where you don't get good returns. All right. Now, my personal preference is to invest with operators where the performance that you see is net of all fees, meaning all the fees have been baked in. The returns you see are the true returns expected for the asset. Okay. And that means that you don't have to go through those mental gymnastics to figure out what the fees are. So, I don't know, I've seen some deals out there where they say our total fee, you can expect to achieve somewhere between a 10 to 12% return. The limited partners, happy about that. But then, the little tiny asterisk in fine print, it says, oh, by the way, we're going to carry, 2% fee on top of that. Now you got to do some mental gymnastics there to figure out what your actual return is. All right. So that brings me to my last point. We want to make sure that fees are actually transparent and honest. Okay. And that they're fully disclosed. Now there's and we already talked about why you should expect fees in a deal is because those fees create alignment between you and the general partner based on performance. Okay, now there's myriad of fees that could be charged for a deal, and we're going to talk about which ones are typical and which ones are kind of atypical here in a second. But let's talk about some of the big buckets. Now, you can expect to see on a private equity deal, especially in real estate, some sort of acquisition fee. Right now, typically in this environment, the typical acquisition fee is somewhere between 1% to 3% of the purchase of the property. Now, what is this acquisition fee? How does this create alignment? Well, keep in mind that the general partners have had to go out and put in hours. They themselves and or their team have had to put in hours, maybe sometimes even hundreds of hours, combing through all the open deals out there, pocket listings. They've gone through underwriting the deal. If they like the underwriting in the deal, maybe they go out and complete due diligence on the deal. Maybe they even have to put down the earnest money on the deal just to get it under contract. Those are all those things that you as a limited partner have not had to do. Okay, so I can speak from our end at passiveinvesting.com. We will probably look at 500 to 600 multifamily deals and close on maybe like 2 to 4 in a year. Okay, those are tons of hours spent looking at various deals, taking them through various stages of our underwriting process, and even going on site and performing, either cursory due diligence or maybe even sometimes getting into the dirty details of the asset, performing those inspections just to make sure that it is a high quality deal to bring to our investors. All right. Now that is what that acquisition fee is meant to offset. All those deals that you didn't see in order to get the one deal that is right for you. All right. Now, asset management fee. Typically, it's between 1% to 2% of the gross income of the property, or it could be calculated based on capital invested. Okay. So you're going to want to make sure to pay attention to that. Which type of percentage is it? Now, the asset management fee is meant to, the operator cover the expenses of the operator overseeing the day-to-day operational management of the property. Now, if it's multifamily or self-storage, more often than not, that operator is going to have some sort of property management in place. Okay, that's what we do. But we then have an asset manager that kind of sits over all the property managers, and that's who those property managers answer to. That asset manager's job is to ensure the performance of the asset. Okay, make sure that the property managers aren't just doing whatever capital expenditures they want to, or, spending any sort of, unnecessary operational reserves. But really, the asset management fee is meant to drive performance of the asset. All right, construction management fee. Typically, you can see this about 5 to 10% of the total planned construction budget. Now, here's the thing. If there's no construction happening on the property, and you see a construction and management fee listed in the PPM, that should be kind of a question for you to take back to the operator and ask why they have that. All right. So if there's construction happening on the property, I think it's totally warranted, because somebody is going to have to project manage that entire capital project. However, keep in mind, you want to make sure that if there is no capital expenditure project happening, CapEx project, that fee is not there. Equity placement fee. All right. This typically can be 1 to 2% of the total investor capital. Now, this is sometimes a fee that's taken for the operator, or maybe even a fund-to-fund manager, to go in and actually get the capital invested into the deal. Again, you want to make sure that this fee is appropriate for the type of deal structure you're going into. If you are investing directly with the operator, okay, I probably would not expect to see an equity placement fee, especially if I've already seen an acquisition fee and an asset management fee in place. However, if you're investing through a capital raiser or a fund-to-fund manager, you might see an equity placement fee, because you are one step removed, at least one step removed from that operator. Loan fee, this is typically between, this is a fee you could see, okay? It's not necessary you'll see all these fees on these deals, but these are fees you could see. Loan fee is typically between 1 to 2% of the total loan amount, okay? And this is, covers the cost to actually close the loan. Again, depending on the deals, you might see some of these fees, and again, you might not. A refinance fee or a disposition fee is typically 1 to 2% of either the loan amount that's being refinanced or the total sales price. Now, why I lump those two together in my explanation, sometimes you see that actually listed in the PPM as what we call a capital event fee, meaning that capital event fee could cover if it's a refinance, or it could cover if it's a disposition. There are costs associated with, closing any sort of loan. If anybody has ever refinanced a house or taken out a home equity line of credit or a home equity loan, you know that there's a lot of paperwork and a lot of legal review that goes into those processes. Okay, these costs are meant to offset that, those costs in the particular deal. Now, again, I'm going to cover one more fee before we move on, but this particular fee that's last is called a guarantor fee. Okay, this guarantor fee is typically 1 to 2% of the total amount, loan amount, for a key partner, KP, to pledge assets to secure the loan. Okay, what does that actually mean? Well, just think about it. If your operator is going out and securing a $80 million or $120 million property, okay, somebody might have to pledge some sort of assets to secure that loan, or maybe they get non-recourse financing. Now, generally, if the loan has pledged assets associated with it, okay, generally you get more favorable terms. Okay, now that key partner is brought in, and their only role is to have the bank balance, okay, the balance sheet to secure that loan. So they get compensated for it. It can come in, various ways. Maybe they get a slice of the general partner's equity. Maybe they get a fee. Maybe they get both. Okay, but just think about it. If you're going to go into a loan or secure an asset that's millions and millions of dollars, I know I don't have that money sitting in my bank account. So sometimes if I see this there, and it's an asset I want to go into, I'm very thankful that there was somebody willing to step up and pledge their assets to secure that loan. Okay, now what's fair? All right, we talked about some of the more common fees that you could expect to see out there, but what's fair? Okay, In a deal, are you going to see all 8 or 10 of those fees? More than likely not. I would probably look at your deals, and if you see more than 4 or 5 fees, as long as they're all fair and reasonable and create alignment between you as the limited partner and the general partner for fair operational execution of that asset, I think that's fair. But if you see more than that, I would definitely question. Okay, so because is the deal being feed to death? So what are the typical fees that I see out there in the deals that I like going into? And it's more specifically what we like or what we see here at passiveinvesting.com. Generally an acquisition fee, right? Again, that's going in to cover all of those deals that we did not do, okay, in order to find the one that is the right fit for you. Asset management fee. This is, again, you want to make sure to create alignment. We want to make sure that we have the best of the best people managing the day-to-day operations of those assets, okay, and really driving them for performance. If there's a construction fee happening or construction happening on the property, I think it's totally fair that the project manager of that construction be able to take a construction fee. Capital event fee, okay, if that property is going to be refinanced or sold, we want to make sure that those costs are covered so we can actually achieve the exit that we're driving for performance. And then if a balance sheet needs to be pledged in order to secure the loan on the asset, I think it's entirely fair if somebody's willing to bring that balance sheet that they get compensated for taking that additional responsibility. All right. Now, again, these are all the different fees, why they create alignment, okay, how they can create alignment within the project, also how they can create disalignment, right? What's fair and reasonable, when you're looking at your deal in this type of environment. Well, let's talk about where you can actually find them, because sometimes I feel that operators tend to, make this a little hard for investors to find. All right. My first suggestion would be, if you're on the phone with an operator, just ask, what kind of fees do you charge to your deal? Okay. Now, even though you asked on that initial intro call with the operator, you're going to take some notes. However, I would make sure that in every single deal that you go into, you're confirming what your expectations are. Okay. Because business plans can change. Next, see if you see it in the offering memorandum or the investor deck or whatever that marketing flyer is that the operator puts out. Now, just because they don't put it out there, it means they may not actually know. Maybe they don't have the offering memorandum sometimes can go out so early in the deal process that they don't actually have the private placement memorandum, all the legal paperwork put together. All right. So see if you see it in the offering memorandum. If you don't, it's more than likely going to be covered in the investor webinar. So much information that didn't make it in the offering memorandum actually gets covered in that investor webinar. So I highly encourage you guys to watch any of the webinars for deals that you're going into. But most certainly, you should see all fees listed in the private placement memorandum. They must be in there. If you don't see them, don't invest. Make sure that you ask the operator first before you get invested, right? So all these things are above or assured, but definitely you must see those in that private placement memorandum. All right, guys, I know this presentation was short and sweet for you guys today. This is your invitation to action. If you're here live, don't go anywhere. We're about to open our Ask Me Anything session. If you are joining on your favorite podcast player of choice, be sure to join me at passiveinvestingwhitney.com. I'll say that again, passiveinvestingwithwhitney.com. There we talk about your investing goals. You get free access to our Passive Investing Made Simple masterclasses and boot camps, and priority access to all of our open deals. You guys, if you're here live, don't go anywhere.